Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY22 earnings conference call of Khadim India Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. Actual results may differ materially. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddhartha Roy Burman, Chairman and Managing Director. Thank you, and over to you, sir.
Namaskar, everybody. Good evening. We welcome you to the conference call to discuss the third quarter result for the financial year 2021 and 2022. Hope everyone continues to be safe. Third quarter is full of festivity and is a major factor in determining the trajectory of the retail industry. Overcoming lockdowns and gradual resumption of economic activities across the country led to a significant recovery, thus giving a much needed boost to the retail industry at large and footwear sector as well. As people start stepping out again, we are seeing a significant recovery to pre-COVID levels. To exploit the opportunity to garner festive sales this quarter, we launched catchy marketing campaigns in our strategic efforts to gain a brand recall to youngsters. Ebar Pujoy Just Khadims and Dil Mein Diwali or Pyaro Mein Khadims campaign saw a viral response on social media and led to good traction. We published our revamped product portfolio and our new variant designs are driving sales in retail business. The launch of new range, the support PU and Hawaii categories has contributed to growth and distribution business. Our affordable fashion positioning has resonated well with our existing and new customer base. We achieved healthy revenue growth across both business, retail and distribution. We have now registered growth for the last 5 consecutive quarters and have poised our profitable in 9-month basis. We continue to strengthen our retail presence in Tier 2 and Tier 3 cities and opened 21 new retail stores during the quarter. The retail network now stands at 768 stores and distribution footprint has increased to 617. Coming to our performance for the quarter in 9 months, FY 2022 revenue grew by 22% to 434 crores. The company has recorded improved gross margin at 37, higher from 34% in 9 months FY 21. We generated positive EBITDA of 35 crores with an 8% EBITDA margin versus EBITDA loss in the corresponding period. PAT stands at rupees 3.8 crores compared to a loss of 45 crores in the 9-month FY 2021. Our focus on managing cash flow and improving working capital efficiency is leading to strengthening balance sheet. We continue to witness improving traction at our store and are very optimistic of scaling operation further. We thank you all your continued support and look forward to continuing interaction with you. We can now proceed with the question and answer session. Thanks and namaskar.
So can we open the queue for Q&A? Mr. Burman?
Yes.
Yes, sir. Can we open the floor for Q&A?
Yes, we can.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin Khankar from Proprietary Investor. Please go ahead.
Hello, Mr. Burman. I would just like to understand the strategy for the company to improve its overall EBITDA margin, get a higher post-tax profit for the shareholders. Thank you.
The company.
Hello?
Yes, can you repeat yourself, Nitin?
The question is, what would be the company strategy to improve the EBITDA margin? So we have already improved over the last quarter also, but what is the strategy to further improve the EBITDA margin so that the net profit for the shareholders also grows going ahead?
So I think it's a function of the basic 2-3 things. Number one, the sales increases which we are anticipating based on increased units per transaction, increased footfalls, increased conversion, increased ASP, which will eventually help us, increase our overall sales along with increasing the number of stores through the franchisee model. We are on a continuous basis trying to increase our gross margin, which is reflective. If you can see in the last 2 years, our gross margin has increased quite well. In this particular year only, our gross margin increased by almost 100 basis points. So, that is one of the very main reasons why we are able to have a good economies of scale come into the EBITDA level. Plus, there is also very strong control on the cost increases that we are looking at. The gross margin also is increasing owing to the fact that there is a gradual premiumization happening across all our product lines in the retail business, which is reflected from the fact that our sub-brands proportion of sales has increased. It's gross margin and economies of scale, which we are confident will only improve once the footfall comes back to normal pre-COVID levels.
What would be the strategy to, I think you have asked this question quite a few number of times on earlier calls also, to repeat the question as to how we penetrate the key markets of North India and Western India?
So I think it's a function of 2 things which we have mentioned earlier, also opening new company-owned outlets to establish our presence in those markets. And given our experience, a lot of our COCOs have a good response in the markets we're opening purely because of the product offering that we have. In fact, when we open our stores, the people are in the western and northern part of the country are quite impressed with the kind of product and the price points that we are offering. And the products have only, improved and become more trendy and fashionable in the last couple of years. So the response has been good, and we are using that platform to attract a lot of franchisees, and for which we're getting a decent response across the markets. So I think our product and our product offering will speak for itself, and we're getting a good response from those markets as well. And as we speak, we are on a continuous basis opening franchisees there as well.
Okay, thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Amit Shah from 80 Capital. Please go ahead.
Hi, thank you. Thanks for giving this opportunity. I would like to congratulate the management on a good result, and the recovery in performance is encouraging. I would like to understand we have launched multiple products in the distribution business recently, and there has been some change in the GST in that price range. So what is the impact on the sales, and how do we plan to expand this business in India?
So I think yes, GST, there is an impact in this price point, both in distribution and retail, and that affects majority of the players across the country. But I think the way we are looking at it is that we intend to continue, offering the products at the price point. In the distribution range, for that matter, we have a good range of products in the Hawaii segment, which is in the range of 120 to almost 220, 230. So yes, there has been a significant price increase, but we're trying to control the pricing, to make the product more affordable. And I think in the long term, I think the GST impact will, stabilize. I think the people will be acceptable for the pricing that is there. In our retail business also, 80% of our product range is 0,000 rupees. But I think on the retail segment as well, I think the price sensitivity is relatively lesser. So I think the impact again will stabilize.
Sure, thank you. The second question I have is, in terms of our distribution network, what is our strategy to increase the network, especially in the Western India?
So right now, our main target and strategy is to focus on the Eastern India itself. And by East, I'm talking about Bengal, Bihar, Orissa, Northeast, Eastern UP. We have a good presence in Central India as well. So I think in this market only, I think there's significant scope for penetration further. We are one of the market leaders over there. So I think Maharashtra definitely, and Western India definitely, there's a lot of scope. But I think for the medium and the short and medium term, we are looking at predominantly penetrating further and maximizing the potential in our existing markets, where our brand presence and brand recall is extremely strong.
Okay. And a last question, if I can. In terms of the promotion expenditure, how much did we spend for this quarter, and how does that compare to previous quarter?
Promotion expense for this quarter was around 2 crores, because it is the festive season, and the last quarter it was around 1.5 crores.
Okay, understood. Thank you. This is helpful. I'll come back in the queue for more questions. Thank you. All the best.
Thank you.
Thank you.
A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. Now, sir, you did mention about the strong economies of scales and a better gross margin that can drive our EBITDA margin, right?
Yes.
Yeah. So I just wanted to understand what is the optimum or a normalized kind of a EBITDA margin we are looking at, maybe at a higher scale of revenue of maybe 800 to 1,000 crores. Some understanding on that.
I think it will be our target is to ensure that we are in the high teens in terms of EBITDA margin, and I think it's very much achievable. And it's also, if we are seeing the kind of growth in terms of numbers and margins in the last 2 years, I think we have enough confidence to be able to implement that, with the product strategy that we have taken in the retail and the distribution segment both. On the retail side also, as I've mentioned in the earlier calls, we are working very strongly on the range architecture, so as to ensure that we are able to ensure premiumization, we are able to get higher ASP, which will also drive to a large extent the gross margin. And we have the largest footwear franchisee retail network in this country, and we're extremely proud of it. And we plan to use that platform to be able to grow further in a asset-light model, which will help us, improve our EBITDA margins significantly higher.
Great. But high teens, we are talking about high teens is around 16-18%, right?
See, before Ind AS, we were working in EBITDA of around 10%, and if we consider the rental expense as a percentage of sales, so it is around 5 to 6%. So we can expect a EBITDA margin of around 15 to 16% when the sales becomes normalized.
Normalized, and what that is 1 to 2 years? Is that what one can expect?
Yes, in maybe if the next year go without any intervention of this lockdowns and all these things, we may expect a 15% EBITDA margin. 15%.
So currently I think we are at about 11.5%, right? So this 3.5% is hello.
This quarter.
Yeah,
we have achieved 11.5 in this quarter.
Yeah, 11.5 in this quarter. So basically, this 3.5% jump would be driven by the factors that you mentioned, right? Of
yes.
Economies of scales of gross margin and your asset-light model.
We need a full year without interruption.
Full year without interruption. Okay. And what would be the revenue that we are looking at maybe next year?
We are in the process of making the budget. So we will come up with the numbers in March.
Okay. And any kind of raw material pressure we are seeing on our business as such?
The raw material pressure was in the third quarter. In the fourth quarter, it has eased out. But compared to last year, it has grown about 60 to 70%.
Okay, and we have been able to pass because we have been able to maintain our gross margin, right? So
yes, we have passed on, but in distribution, passing of the prices is very difficult. It impacts the volume also.
Okay. Now this fourth quarter you mentioned now current quarter the raw material prices are on declining, right? Trend?
Yes.
So ideally that will also give a kick to your margins because ideally you would not decrease your prices at least in the retail segment, right? Once you have taken.
But the thing is that in the fourth quarter, the first month, due to this one is the GST increase and also the Omicron, the sales was muted.
Correct. Yeah, I understood. Yeah, I think that's it from my side. All the very best, sir.
Thank you. The next question is from the line of Varun Gia from Dimensional Securities. Please go ahead.
Hello. Good evening, sir. So if you could provide the breakup of Coco and FOFO revenues in retail and even the number of pairs sold for retail and distribution this quarter.
In the retail, the number of pairs sold is 21 lakhs and in distribution around 81 lakhs.
Okay.
And sales number in Coco it's 67.5 crores and in FOFO it's 46.4 crores. Total retail sale is 116 crores.
Okay. And I wanted to know your net addition to the overall retail stores is around 6. So there has been store closures, and if in what region have they been?
21 stores, retail stores has been open and 15 has been closed.
And 15 are closed in which region? If you could mention that. And for what reason?
It's been across the country. I mean, it's subjected to the performance. There's no particular skew on the region.
Okay.
Because there was CEO which was bleeding means in the COVID period, so we decided to close some stores also.
Okay. And last question, if you could provide how much revenue comes from online sales currently, and if that would grow going forward, what is your outlook on that?
So the sales to the online platforms contributed almost approximately 3%, and we're looking at growing it to approximately 5 to 6% in the coming future.
This would be from your own site or website or
no, all the online platforms, which includes Coco and own websites and marketplaces and Omni.
Okay, got it. Thank you.
Thank you. The next question is from the line of Hemant Shah from Asian Market Securities. Please go ahead.
Thank you. My question has been answered.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi. Thanks for the opportunity. So this quarter we have registered the highest ever gross margin. For the 9 period also we have registered highest ever gross margin. So if you can help us understand the factors which have led to this improvement.
I think predominantly improvement in our ASP premiumization and efforts to reduce the cost of production. The main 3 factors. Because as I mentioned earlier, we've done a lot of work around the product range, making it more trendy and fashionable. We have tried to improve the perceived value of the product as well. We've taken the required inflationary increase. The focus is on increasing the sub-brand proportion of sales and trying to drive the customers to more fashionable products, which is driving the ASP, which is driving the gross margin.
Fair enough. Second question is, last 24 months have been tumultuous for economy, for world in general and retailers in particular. And we had our own headwinds which started way before COVID also hit us. Now, visibly a lot of repair work has happened in last 24 months on cost front, on efficiency front. So at what level of revenue, when threshold number, we should actually expect Khadim to become a very steady state footwear player, which is not disturbed periodically by all this headwinds. And then just to put in perspective now, with more and more footwear players getting listed, we can see that the profitability curve or volatility in the numbers is way lesser than what we have experienced in last 2-3 years. So what are you doing, or what are we actually taking steps to ensure that we remain much more stable entity as we go along and we come out of this crisis?
So Tejas, I think we've already reached steady state levels, and I think it is reflected from the fact that our numbers and our profitability has, as you said, our gross margins have been increasing quite well in the last 2 years. Our EBITDA margins have improved. I think the point Enrique was trying to make earlier was that if there is no impact in terms of a wave or a lockdown, your point that a lot of other retail companies or the consumer companies have been relatively less impacted, I tend to disagree with that, because based on the numbers that we have seen, in terms of be it in the retail side or distribution side, we have had a similar kind of a growth or impact owing to the COVID lockdowns or something. So the impact is the same compared to the others, and I think it may have looked a little tougher on us purely because we had a little bit of a rough start prior to COVID. But I think we have back to strong footings. We are aggressively looking ahead. We are working on all the business fronts and the product fronts. We are expanding our teams very aggressively. We are rebuilding ourselves. So I think we are pretty much on strong and sound footing. And whatever impact you're seeing on us, I think we're seeing on the industry at large and vice versa.
Sure, fair point. And then just last one, and I logged in late, so I'm not sure if you touched upon this earlier. So in our recent channel checks, in general we picked up that our merchandise has definitely improved, and it is very much visible also. So if you can explain or help us understand what have we done on the back end in terms of design element, production element to actually improve our merchandise, and that is visible in ASP as well.
So I think it's on the I'll divide the answer in two parts, in retail and distribution. On the retail side, I really invite everyone on this call to come to our office and possibly come visit our sample rooms to see the kind of change that we have made. The products are more casual in nature. They are more trendy. They're more fashionable. Like for example, you'll have a pair of moccasins or a pair of wedges, which are very, very fashionable compared to what we had earlier. You'll have pairs of men's chappals and women's sandals, kids footwear. So I think for me to explain to you a qualitative question like this will be a little tough, but it'll be great if you can come and have a look at us. But I think the stronger point over here is that compared to we've done like a very, very strong analysis of on the competitive landscape in terms of product. Like we've ourselves, the entire team has gone and visited like a lot of stores, try to understand what the other brands are selling in terms of product, in terms of price point. And I can confidently say that the kind of product range that we have created is significantly superior, in my view, compared to a lot of competitors, purely in terms of product and the pricing, which is what I'm calling the product offering. So on the retail side, for sure, even in distribution, I think we're using our retail experience to be able to provide the kind of products, be it in Hawaii, be it in PVC, be it in PU, be it in sports. Again, lot of work, lot of competition analysis, a lot of industry analysis, what is working internationally. We're trying to incorporate all of that into our product range. So I request you to come and visit our stores and visit our sample rooms, and we'd love to host you and show you around, so you to understand and experience the change that we have made.
Sure. Thanks and all the best. That's all from my side.
Thank you.
Thank you. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, good evening. Congratulations on such good set of numbers. This quarter we did some around 8 CR of PAT, and so on a given that all the factors remain constant for at least 1-2 years, so can we achieve the pre-COVID levels of profit after tax in FY23?
Yes, I don't think it is an issue. Assuming everything remains the same and there's no external impact, I don't see that as an issue.
Okay, so basically we'll be crossing around 38 CR of PAT in FY23, because we did that in March 18.
Yeah, so I think that should be achievable.
Okay, noted. Thank you.
Thank you. The next question is from the line of Amit Shah from 80 Capital. Please go ahead.
Hi, thank you. So I think one thing that we have noticed is many of our competitors have announced their expansion plans to set up franchisee stores in tier 2 or tier 3 cities, which is what we have been doing, and we are very strong in that space. How do you see this changing the competitive landscape for Khadim?
Sorry, can you repeat your question? Because you're not very...
Sure. Is my voice audible now?
Yes.
Yeah. So what I'm trying to understand here is many of the competitors have announced their plans to open franchisee stores in tier 2 or tier 3 cities, which has been our strength, right? So how do you see that impact the overall competitive landscape for Khadim?
See, I think we have, seen the other brands' product ranges, what they have to offer in terms of product and the price point, the entire offering. Frankly, we internally are relatively less concerned purely because, we are able to offer the entire product gamut, product range for the entire family for all occasions. So we have, on the men's category, we have men's chappals starting from, $300 to like 4,000 rupees across all categories. So you'll have Hawaii chappals, you'll have sandals, you'll have open chappals, you'll have moccasins, you'll have loafers, you'll have driving shoes, you'll have formal shoes. and casual shoes. So I think such, and on the women's side, similarly, Hawaii chappals to fabrication chappals to, Evas floaters to wedges, stilettos, formal shoes, and similarly on the kids side. Such a kind of range, which starts from 200 rupees ending around 3,000-4,000 rupees. We have not seen too many competitors being able to offer such kind of ranges. So yes, there are some brands offering particular categories, offering particular ranges of products and focus on a particular price point. And many of them, we need to evaluate how profitable they are, because some of the brands are offering, are still on the much lower price points. So how the ROI sits, we don't know, and it'll be good for all of us to evaluate. Similarly, some brands focus on a particular category, so it'll be very interesting to see how that really works out. And some brands, if they're premium in nature, how it will really work in a tier 2, tier 3 city. We'll have to see how the volumes pan out. So I think I think there's a potential for this country overall to be able to sell more. We have consumption per unit per person in this country of 1.7 pairs, which is on the lower side. So there's definitely scope of volume increase, but we'll have to see how all these pan out in terms of numbers, in terms of commercial economics, and in terms of viability. So I think it'll be, let's see how it goes.
One thing I like to add is that we have already penetrated in Tier 2 and Tier 3 cities long ago, because we have the largest number of franchisee in footwear, and our sales from the Tier 2 and Tier 3 cities in retail is around 57% of our total sales. So we are already position advantage in these cities, Tier 2 and Tier 3 cities.
No, understand. The point I was trying to get to is, with more options, the chances are there that people might want to try something else. But I think this is what I heard. Is it fair to assume that you don't see any material impact of this on the volume or pricing?
Material impact on the?
On your volume or pricing because of the increased competition?
No, I don't. I think we don't foresee it internally.
Okay. Understood. And the last question I have is in terms of the outlook for next 2 to 3 years. Where do you see the gross margin and especially the EBITDA margin to stabilize? Is there an internal target that the company is trying to achieve?
So on the gross margin side, I think we're looking at increasing, year on year by 150 to 200 basis points. On the EBITDA margin, as I mentioned earlier, we're looking at high teen numbers.
And the target is to achieve that over next 2 to 3 years?
Next
Hello?
1.5 years, yes.
Okay. All right. Thank you. Thank you so much. Good luck.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, just one more question. Are we looking forward to expand more stores? And if yes, what would that be? Company-operated stores or franchisee-operated stores?
So we're looking to open company-operated stores in areas where we want to establish our presence, or where we know it's a short location and we are definitely going to make money in those areas in our very, very established markets. But the larger focus will be to increase our store presence through franchisees.
Okay. Thank you. Noted.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time.
Hello?
Just give me a minute, sir. As there are no further questions, I now hand the conference over to the management for their closing comments.
So thank you for your continued interest in Khadim India Limited. We internally are working extremely hard to ensure that we are able to deliver all stakeholder value, and we are delighted with the consumers. We stand by our positioning of affordable fashion, and we plan to continue to grow in that strategy both in our retail and distribution business. Thank you, and we wish to remain in touch with you. Happy to connect with any one of you later on as well. Thank you.
Thank you.
Thank you. I now hand over the conference to Mr. Nachiket Kale from Orient Capital.
Thanks everyone for participating in this call and asking your questions. We at Orient Capital are investor relations advisor to Khadim India. So for any queries and doubts or any data requirements, please feel free to reach out to us. And we look forward to continuous interaction with market participants. And we again thank you for your interest in the company and supporting Khadim throughout the year. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of Khadim India Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.